Welcome back. High-yield savings options like, I don't know, CDs, money market accounts have been enticing savers with higher than normal returns. And here to discuss what you need to know about these types of saving vehicles and all kinds of financial information is local financial professional John Vandergriff from Blue Ridge Wealth Planners. So let's stick to that topic right here. Why are high-yield savings accounts performing so well at this particular time?
Yeah, so I mean, it goes back to as we had inflation start to increase, the Fed started increasing interest rates to try to slow down the economy. And so as the Fed increases its interest rates, that gives banks more money that they have coming in for loans. The loans get more expensive, therefore they can pay more out in savings accounts. So as interest rates go up, it's not an immediate increase, but there's usually a little bit of a lag. And some of that has to do with the bank, you know, trying to be profitable too.
But like you said, as just a regular savings account, you're getting 1 or less than 1% on your money.
Yep.
So it's not helping you because it's not growing. So the things. So the benefits of that high yield savings account. For anyone, I guess, basically.
Yeah, I mean, obviously, as you look at it, anything you have to do with your investment is try to tie into what is it that you want this money to do. And so most of the time people have money in banking accounts so that that money can be liquid. But when you have liquid money in banks, normally you're making a investment compromise in some ways, because like you could have money that's liquid in the stock market and have a higher return, but also a higher risk to it. So as you look at it, any money that you're wanting to have liquid, this allows you to have more interest that you can make on it than you were able to 18 months or 2 years ago.
So everything that's good normally has a bad side to it. Are there the negative parts of that?
So with this money being liquid and those interest rates being current, you know, if the Fed, as we saw today, they kept interest rates flat, if they start to have a decrease, that will cause those liquid accounts to start paying less interest over time. So it's one of those where, you know, when we sit down with clients, it's really the conversation of what's the main thing you're trying to do with this. If you want the money to be safe, there are some options that could tie up the money a little longer and maybe keep some of this good interest rate that we have in place for a little bit longer instead of leaving it liquid and at the mercy of whatever the interest rates are.
What other savings vehicles can offer like similar benefits?
Yeah, so I mean, you got high yield savings accounts, money markets, CDs, which will start to take away from some of the liquidity. You can invest in treasury bills, or, you know, as interest rates go up, it's usually good for insurance companies. So sometimes you can get some fixed rate annuities or different things where if you are willing to tie up some of the access to that money, you could get similar returns for longer periods of time, or maybe even get potentially higher returns depending on what it is.
This time around, they didn't do much. If they continue to raise interest rates, where are we headed?
Well, I mean, the goal of raising interest rates is to try to slow down the economy. That's what we're doing. And so you've got the Fed's in kind of a compromising position because they have to raise rates to slow it down, but not slow it down too much to where we have just a complete stop. So I mean, the more that those interest rates go up, the more it will cost you to borrow money, the more these types of accounts will pay, but also the harder it will be for some companies to go out there and continue to grow. So, I mean, I think, and a lot of the economists out there think we may be at the top of where interest rates are and may start to see some interest rates go down. They announced today that they may have one more coming this year, but again, I think we may be toward the top and then maybe see some relief in that area in the future.
It's tough for people because like to take on a mortgage or even like a car payment with those higher rates, all of a sudden you're paying a whole lot more.
Yeah, it's definitely higher than it was.
So. All right, John, thank you very much.